Hi, this is Renee O'Brien with Sharp Tip Consulting, and the tip I have for you today is about collecting short-term savings or a cash reserve for small businesses. One of the difficult challenges about running a small business is the uneven expenses and possibly the uneven revenue that you may have throughout the year. You have obligations that you are expected to meet, and yet maybe you might have seasonal work that doesn't allow your income to be even, or you may have certain months where there's large expenses to be due. For those reasons, we want to be sure that we are calculating how much should we be saving every month and how much should we be putting away. So I have created a calculator here for you, a simple Excel spreadsheet, and if you go ahead and contact me, I'd be happy to send this to you. This one is made for a small service business, but it should work for just about any business. Let me go through and show you how it works. Basically, we're going to go through and we're going to enter in information in the blue sections. And I'm going to tell you about each blue section, and you can go ahead and fill it in for yourself. The first section, we're going to be looking at these rows here. These are the rows in relationship to payroll. We want to be entering information about how frequently we pay and things like that. So to explain why we'd be looking at that, let me take a peek over at a calendar for a second. A lot of service businesses actually pay their employees either every week or every other week. And so let's say that this particular employer, you're an employer that pays on the yellow spots every other week. And we're going to start here and we're looking in the month of February. So you're going to pay on the 14th and the 28th, and then in May you're going to be, we're going to go over here in March, you're going to be paying on the 14th and the 28th, and then over here in April we're going to be paying on the 11th and the 25th. And the really cool thing about that as you're going along in the year is that you can see that, let's see here, let's look in April. So we're actually, since we're paying every other week, we're going to be paying for 10 work days, 5 in one week and 5 in the other. And we're actually going to do that 2 times in the month, so that means we're paying for 20 work days. However, if we look carefully, we're getting revenue. I'm just assuming we're working only Monday through Friday. We're getting revenue more than 20 work days. We're actually getting revenue 22 work days throughout the month. So that's pretty cool, right? We're collecting revenue for 2 more days than we're having to pay out. Well, that's really cool until you get to the 2 times a year. In year 2014, this is August and January. If you pay every other Friday and you are on the same pattern that this person is, those 2 times a year, you're actually going to have to pay 3 times in those months. So in those months, you're going to be paying for 30 days of employees out in the field, and you will only be getting your revenue for the 22 days or whatever it is that you have available for billing out. So those are months where you're going to have cash crunches. Let me show you on a calculator here. This would be an example. This is from a different year, but you can see on here, looking at the graph, that we have the revenue in blue, which is relatively about the same from month to month to month. We're assuming this is a business that is not in a heavy growth mode, just for simplicity. Okay, and the red is the payday amounts that you're paying out, and you can see every month it's just a little bit less than your revenue as far as the number of days, right? We can see why you'd be an advantage in those months. That's why we need to save like a squirrel for a rainy day, because these 2 times a year, you're going to see that look at how much you have to pay out in those expenses. Okay, add up all these little itty bitty extra spaces here of the number of days that you're not paying for, and that's where they show up in here. So that's one of the main reasons we want to start with our cash savings. Okay, so we're going to go back over here. The cash savings, first thing we want to do is we want to identify how frequently do you pay. So we're going to say that this person pays bi-weekly, for example. Okay. Then we want to go down to the next thing. And if you are using QuickBooks, you're going to run your payroll summary report. And if you're not using QuickBooks and you use a payroll company, you're going to want to grab the report that the payroll company gives you. And what we want to enter in here is what you get paid for net payroll for one pay period. Okay. Then we're going to want to enter in what was the gross payroll for one pay period. And if you don't know the difference, let me just explain really quick. Gross means that's before taxes are taken out. Net means it's after taxes are taken out. All right, now I have in my calculator already, it's already estimating Social Security tax and Medicare that you are supposed to be paying as the employer. So it's calculating what it is already, but you may have state tax as well. If there's anything that you have to kick in as the employer, it doesn't come out of the employee's paycheck, but you have to kick it in, you're going to go ahead and add those company paid taxes into this line here. Next thing is we want to put what your monthly revenue is. Okay. And then we're going to determine whether or not you have been told by the IRS that you're supposed to pay your taxes, your 941 taxes, your payroll taxes, quarterly or not. Most businesses, when you've been in business a while and you have you've exceeded a certain amount, I think it's only like $1,000 a year of tax, something like that, they will say that, you need to be paying monthly or at a more frequent rate. But let's say, if you were going to pay quarterly, you would say yes here. But let's say, obviously, this person makes enough money, they're going to be making their deposits monthly. The reason why I'm asking that is because if you are paying quarterly and you're not having them deposited by your payroll company, then you end up finding yourself in a cash crunch where you've got to accumulate all that money that you've been pulling out of the employees' paychecks. It's actually not even your money, right? It's money that was taken out for their taxes and you're holding it in trust for them. And then you have to deposit it once a quarter. Well, especially for beginning employers, that's really tough. It's tough to kind of move that money aside, to know how much to do. And then when that bill comes, it's really scary. So if that's your situation, you're going to hit yes there. All right, next question we're going to ask here is what percent of monthly revenue savings for a cash reserve to be saved in 1 year? So the thing is, I like business owners, and I find as a consultant, it's a great thing to encourage business owners to begin saving a cash reserve just for the heck of it. You don't necessarily know what's going to come. You may get hit with an ice storm or some kind of an emergency, or, all of a sudden there's just like no business for a week or whatever it may be. You need some emergency funding. Now, to begin with, I usually recommend that you'll have one full payroll in your cash reserve. That's a good amount of money for you to have to begin with when you first get started. Then we're going to start working towards 1 full month of complete expenses. Anyway, for the purposes of this calculator, we're going to have you enter a percentage. Okay, and I'm saying that I would like 25% of 1 month's revenue by the end of the year. Okay, and then here we have something extra monthly savings. Let's say you pay, for example, your workers' compensation. And let's say your workers' compensation is going to expect you to pay a big $20,000 check at the beginning of the year, and then they'll have a few monthly payments for like 5 months, but the rest of it they don't let you pay on a monthly basis. That would be, something you might want to save for. But let's say it's not quite so expensive. Let's say you've got something you're saving for and you want to save an additional $400 a month. What we're going to put in here is how much you want to save in a month. And then on this line, we want to find out how many times in a month we want to put our savings away. And at the moment, it is selected 2, which is what I'm thinking. I'm thinking twice a month. Because if this is a biweekly payer, that means 2 times a month. 2 weeks out of the month, you've got no money. You're going to bring revenue in, you're going to pay it all out for your payroll, and you don't really have money to pay bills except for the other 2 times. And to pay one hefty bill of $3,856 a month into your cash reserve is a lot of money. So we're going to divide it into 2, and it's going to be $1,928. Now, just to break this down, you can see that for saving for the extra payroll, that is $2,477 a month. That's how much we're putting away every month so that we're not going to run into any trouble, okay? And that's just for the extra payroll, so that when that payroll comes up, we're not going to have a problem. This one down here is what we're saving so that we can build our cash reserve. And this number over here is what we're saving so that we can purchase whatever our extra purchase is. Now, you're like a lot of small business owners, and this is a brand new concept to you. These numbers are freaking you out. But remember that this is a business that makes $47,000 a month in revenue. And this is a business, this is where you'd want to be. Probably as a starter, you're just going to be working on saving for that extra payroll, and then we'll work our way up to building, more of a cash reserve. It's a completely different kind of business that you end up running when you don't need to tap into lines of credit, you don't need to tap into debt. Instead, you've got some security built there. You feel like you are actually building something. You've all this blood, sweat, and tears into the business, and every day that number is going up and up. All right, so hope you enjoy this, and let me know if I can help.